I will explain the term overround, which is quite a complicated subject, but one that you will hear quite a lot and is something that's quite important. If I look at something simple like a horse race, the true chance of there being a winner is 100%. There can only be one winner. So the chances of there being just one winner is 100%. I know you might say there could be a dead heat. Technically it's still 100% because actually a dead heat with two horses is counted as half a winner and half a loser. So it still adds up to 100%. What overround is, there is a chance of one winner. That's 100%. It's then based on the odds for that happening. So if it's a two-horse race, both horses have equal chance. There should be even money and even money, 50% and 50%, adding up to that total of 100%. What you'll find is, in bookmakers' cases, they will price it up at 4 to 5 and 4 to 5. That gives them their profit margin. So the true chance of something happening is 100%. The lay odds for the bookmaker may add up to 120%. That 20% is their profit margin, and it will be classed as an overround of 120%. Races like the Grand National, etc., can have 130, 140%. Those percentages have slightly come down over the years, largely with the introduction of Betfair. And even in trading terms where you haven't got bookmakers percentage, the lay price on Betfair is probably just over 100.5, 101, somewhere around there. So you will find the lay price will be just over 100%, the back price will be just under 100%. Now, overrounds are still important in trading terms, because if you have a horse that's trading at, let's say you're doing it half an hour before, the book can be called what's called slack. So the price is on the lay side half an hour before, maybe at 104%. And realistically on Betfair it should be near 101%. So you could have a horse that's at 2s, which is an implied probability of 50%, shortened to 1.96. So he's just come down by 1%. So if the book on the lay side was 104% and that horse came into 196, it would now be 103%. So actually, even though that horse has come from 2s to 196, nothing else has to go out. So if you were thinking, this one shortened, I'll lay something else because it has to go out. Because that book's slack, i.e. there's quite a biggish difference between the 100% and the 104%, the book's slack, it's just tightened up a little bit to 103%. If the book was at 100.5% and one shortened from 2 to 196, a 1%, that would actually bring the lay prices down to 99.5%. So actually it would be underround. So actually something then would have to drift in that particular case, because if it doesn't, the bots will kick in, taking that back over 100%. But we're getting into a complicated subject that if anybody's interested, I'm happy to more than explain them to them more. But ultimately, an overround is the percentage of the lay price above whatever the potential outcome is. So if it's a two-horse race, the potential outcome of one winner is 100%. The lay price, the bookmakers will price it up at, will be 110, 15, 20%. That is an overround of 115, 120%. That's what the term overround means. There is an example above that should probably explain it better than I am, but overround, it's that bookmakers profit percentage, and I'll explain the term underround when we get towards that one.